Hey everyone, welcome to Dr. Frank's Finance World. I am Dr. Frank, the bank, where I try to teach you something about finance and hopefully help you put a little more money in the bank in the process. We're starting a new world this round to go around about here. We're going to talk about fundamental analysis. The ultimate purpose of it is to try to figure out what something is worth, or what they call intrinsic value. So if you like what you see, please be sure to subscribe, and notifications might be important on this one because there'll probably be about 8 to 12 videos on this. Look in the notes for links and websites, of course, and at the end of the video. And check out the books in our bookstore and the Amazon links, because there's a couple of good ones from the next few out there. So anyway, this is a giant topic area. It's a huge topic area to try to figure out information about a firm, if you will, out there. It is, though, however, like most things in finance, a process. And thus, it is not just applicable to stocks, but you can use it on bonds and mutual funds and things like that. So the focus overall for the videos will be where to find information. That alone will take about 4 videos or 5 videos out there. We'll also talk about how to organize the information to transform it. Basic accounting data gives you some story, but ultimately by changing it into a percent of sales or a percent of total assets, it gives you more information. We'll also, talk about the understanding the trend in the background information, so you can get a little more better picture of the firm and so forth. We will also, I'll show you some really good examples of competitor analysis and the impact that it has on your intrinsic value for your company. We'll look at how Wall Street values it, and then finally, in a future value one out there, we'll look at connecting the future numbers to the valuation. So anywho, starting along here, the first part of this will be where to find information, part one. It starts with finding information on companies, of course. If we're going to transform the data and learn something from it, we have to find it first. And there are many, many, many sources. I've been at this a long time, and the ones I bring to you, I think, are the best ones out there. And all of it's about information about companies. It's a little more difficult to find information about industries, but important. We will do that as well. And in these initial videos, we'll be talking about these essential 5 places you can go look for information. Finviz.com is my favorite. It will not be this one. We'll talk about this in the next video. Value Line is a pretty good one as well. You can find it in most of the time in your public libraries. It's about a $400 to $650 a year resource you can look up for free. We'll talk about Morningstar that has a pretty good free grab on information. You can sign up and get a free trial period and stuff like that if you want to get deeper info. Also, Yahoo Finance, which is a real good quick picture of what's going on. And then finally, we'll go to the granddaddy of them all, something called Mergent. If you can get that through your library system, it is amazing as a resource. So anywho, so the first thing to know about finding information is you kind of have to know the economy first. I mean, the reality is if you don't know the environment in which the firms are competing, it's kind of hard to figure out what sectors and industries and firms you're interested in. There is definitely an interrelationship there. And we'll talk a little bit more about that in the one dealing with investing and valuation stuff coming up in the next world or series we're looking at. But overall, most people look at it from what they call a top-down perspective first, which is they're looking at the market or the economy out there, and then they're looking at the sectors. There's 11 of those that make up the entire market or economy. Within each sector, there are industries. You can kind of look at how those have done and whether they're up and coming or not doing well now and so forth. And then finally, you look at it at the firm level out there. The 2 sources we'll be covering for information tonight are Yahoo Finance and Morningstar. So if you go to Yahoo Finance, finance.yahoo.com, you'll pull up a basic page that looks like this. It has some newsy information, some of that kind of stuff out there, which is okay. There's better sources. But it does have where you can put in information and look up companies and symbols. Just type in the company name, or if you know the ticker symbol, you can put that in as well. But it's a pretty good starting place, and it breaks down the markets for you. We'll talk in investing how each one is a little different and how a story tells you what's going on. This is a day, obviously, that everybody was making money, so all of them were up. So once you put in, and I put in the name of a company here, I can't tell you that for FINRA reasons, but at any rate, I put in a specific company in here, and it pulls up, the first thing it pulls up is the summary. And the summary will give you information about the basic information about the firm. If you come down here, you can look at the stock prices and close and bid and asks and all that kind of stuff. It will also pull up, however, how big the company is market capitalization wise, how the beta is, which is a measure of how the stock moves relative to the market in general, price to earnings, and some other basic ratio information. What we're really going to be focused on in this series is the financials. But we will come back to Yahoo Finance because the statistics they have and the analysis they have is pretty good as far as seeing what analysts are doing in a real quick and easy down and dirty method. I also pull up options chains when we get to derivatives, and that's something else I use Yahoo Finance for. So ultimately, when you click on the finance part of it, you can pull up different things, whether it's the balance sheet or the income statement or cash flow, whatever. What I pulled up here, kind of an easy one for you, is the income statement. One thing to think about when you're looking at data from any of these companies out here is it going forward to back or back to forward when you're looking at new versus old? This one, for instance, it shows you, 2019's data, 2020, 2021, 2022. So it's getting newer when you go from right to left. And it also gives you something called TTM, which is the trailing 12 months. As you get further into the year, you can get a better picture of what's going on this year versus last. And you can see in the basic raw data that the company was doing pretty well, growing really until recently. 21 and 22 were pretty good years for companies because there was a lot of cash being thrown at people and businesses by the government. And then that growth rate started to slow down more recently. Most of these are set up almost identically, which is basic income statement is going to be revenue or sales minus your cost of goods sold, or your cost of revenue will give you a gross profit. And then from there, you will subtract out overhead, others call it operating expenses if you add depreciation and that kind of stuff in there, to get to something called operating income, which is also known as EBIT, which is earnings before interest and taxes, which means, thank you accountants for making it easy for us, we'll subtract out the interest expense or anything related to interest expenses here, whether it's a cost or it's actually income coming in, to get to something called earnings before taxes, or they also call it a pre-tax income here. And then you will take out your tax provision, and what will be left is called net income available to common shareholders. One of the interesting things to note pre-tax wise here is you saw really good growth over the last 4 years or so in the pre-tax income, not so much recently, but look at the difference in the tax provision over this year. They had to pay $4 billion more in taxes, and that is the main reason why the net income available to common shareholders is less than it was in an earnings per share standpoint. So anyway, this is where you get the basic information. It does not have an Excel download. So what I do is I highlight these columns and copy it down where I want, and I copy and paste that into an Excel file. When you do, it will look something like this. Actually, it won't look like this because the columns aren't wide enough. So I will open up a basic Excel file, and then I will widen the columns so the information will fit in easily and won't look all funkadelic. And then I'll drop the numbers in. You can see it's the same ones, but because it's in Excel now, you have a chance of actually transforming, putting things as a percent of sales or doing formulas to this to allow you to look at certain trend numbers, which is going to be helpful when we're actually trying to come up with the fundamental or intrinsic values. So all the numbers are the same here, and nothing to really tell further about that. So anyway, when you go in to download data, it's always better to pull more than less. I will actually pull the data and create one spreadsheet that will be just my firm, but it will have the income statement and the balance sheet and the cash flow statements as different tabs on the same file. If I want, I can also put the information for competitors, because ultimately what we want to do is compare how much of each dollar they spend on different categories like overhead or cost of goods sold, to try to get a different picture of how these firms are making money in the world out there or not. So anyway, I will pull it from my company for these 3 sheets and competitors if I am there at the same time rather than having to go back. So Yahoo's a pretty good place to go for free. It has tons of ads, however. God, they jump up all the time at you. Has no direct link to Excel, and the Excel is handy for later. And it only has 4 years worth of data. So it does have other useful information. We'll come back to that later. So when you look at the fundamental analysis for Morningstar, www.morningstar.com, you can also look at that as well. Many times Morningstar has been thought of as mutual funds, analyzing mutual funds, but they actually have a very good stock part as well. When you first pull up Morningstar, you'll see the basic page like this. There's morningstar.com, and you will put in a ticker symbol here to pull up a specific company. But they have a lot of topics, from exchange traded funds to stocks to bonds and markets and so forth out here. So it's a pretty good place to go. Ultimately, when you put in a company's ticker symbol, it will pull up the basic quote on them as well. And it opens up these new categories down here. We're going to be talking about the financials today, but they have some pretty good operating performance and valuation information in there as well. And then they'll, so you get the basic analysis. It does have down here competitors. That's kind of rare. You don't find somebody who will throw competitors up there very easily. I mean, sometimes you can think of them, of course, especially when you break it down to the segments of a business. So we'll get to that too. But basically, that's good information to have as well. So once you pull that up, you can go to it'll pull up the key statistics down below it, and it gives some financial health, current and quick ratio, the interest coverage and so forth out there. Gives some basic multiples from price to earnings to price to book and so forth. And it gives over here annualized growth rates and profitability, which is pretty interesting. In this particular firm's case, their net profit margin is 34.5%. You want to keep numbers like that in mind, because overall, long term, the average net margin, how much of each dollar is left over as net profit, runs about 7%. It's 4, 5, 6% higher than that right now, because firms, the whole market's gone through kind of a profitability time period that's been great. But actually, as you see the economy slow down again, you'll see those numbers come back down. But the bottom line is, this is 3 times what you see normally, and that would generally be thought of as a very lucrative company to be invested in. Anyway, when you come down to the numbers, you can also pull up the income statement. They will give something very similar as well. They'll give a 3-year look and so forth. You can export the data here, which is great because they'll send it out in Excel format. You can do the balance sheet, the cash flow statement, and all that as well. When you do and export it, this is the income statement. It actually gives you like a bazillion zeros here. This is one of those ones where you'd probably try to clean it up a little bit, but basically it gives you all the dollars out there. And keep in mind, it is going from old to new when it goes this way. It also does the trailing 12 months as well. So you can see that revenue-wise, they barely increased in the last 12 months, and profit-wise, they're not crushing it out there as well. So anywho, Morningstar is much deeper information than Yahoo, which can be good and bad because it's, information overload to some degree. Some really good stuff in here as well. It has lots of info, which means more complex. It does have the Excel downloads, which I love. It's one of the few who suggests competitors, and the free data is somewhat limited. You need to kind of sign up, and you can change emails and stuff and get information that way. But bottom line is a pretty good source for free information. So the books I would suggest as we close out this section is The 5 Rules for Successful Stock Investing, Morningstar's Guide to Building Wealth and Winning in the Market. Pat Dorsey, read some other stuff, used him in other investment class stuff. I do, great guy, has some really good insight there. What research we're going to this time is we're trying to talk about, okay, if we're going to look at Morningstar and the ratings that they have, and this is the first chance we've really looked at somebody rating something, the question is, are they any good? Do they make you any money? I mean, that's what it really comes down to, right? That's where you're going to lay down your money. So the first article up here is from Cambridge. It talks about Morningstar ratings and so forth. When we go to that, that's actually this one. And it says, this study examines the Morningstar rating system as a predictor of mutual fund performance. We compare the predictive ability of rating system with other alternative. The results indicate findings that are robust across different samples, ages, styles, and so forth. In other words, they got a good data set. First, low ratings for Morningstar generally indicate relatively poor future performance. And that's kind of true in another one we'll look at later called Zacks, but basically they're pretty good at picking losers. Second, there is little statistical evidence that Morningstar's highest rated funds outperform the next highest and median rated. So if it's rated 3, 4, or 5, which are their top ratings, guess what? They all kind of do the same. And then third, Morningstar ratings at best do only slightly better than alternative predictors in forecasting future fund performance. On the other hand, here's another paper. It was written a little longer time period ago, but it talks about the determinants and predictability of mutual fund ratings. And basically, we find that higher ratings tend to have higher risk-adjusted performance, lower systematic risk, a greater degree of diversification, larger asset base, managers with longer tenures. That's something I actually look at when I look at mutual funds as well, to invest my money and my clients' money in as well. Lower front-end charges. That's a common theme in investing out there. We talk about mutual funds. The low or no load front-end funds have done just as well as the other. And you have to consider expense ratios. Persistent tests on fund ratings indicate statistically significant persistence in fund performance over the short time horizon. So you're going to win over the short term, but it could be a little tougher long term. We find that highly rated funds perform substantially better than lower rated funds. So that's what the other would have said as well. Overall, the results suggest that the Morningstar rating system does indeed provide some useful information to investors in their mutual fund selection process. So anyway, closing up here, the strategy or tip I would use on these two, I would use Yahoo for quick looks at things out there. And when I wanted Morningstar, I would use it for more in-depth information. So please don't forget to send emails and comments, suggestions that you have. Don't forget there's Ask Dr. Frank out there, and Finding Information Part 2 is next. Have a great day. Thanks. Bye-bye.